Good morning, grade 11s and 12s. Today we'll be taking a look at the VAT control account. Many learners lose easy marks on the VAT because they confuse input VAT and output VAT. In this video, I'm going to break down the VAT control account step by step using a very simple method so that by the end you know exactly what goes on each side and why. Without wasting any more time, let's get into the video. So, what is a VAT control account? A VAT control account is a ledger account used to record all the VAT charged on sales, output VAT, and VAT paid on purchases, input VAT. It helps businesses calculate how much VAT is owed to SARS and how much can be claimed back. The balance in the VAT control account shows the net payable or receivable at the end of a period. So this VAT control account helps us determine how much money our business owes to SARS or how much money SARS owes us. So before we do a VAT control account, we have to, an important thing that we need to take note of is that our VAT control account is done on the VAT amount. So it's always done on the 15%. You'll see later on in this video when we do an example what I mean. Okay, so here is an example. Here we are provided with information relating to Debs stores for the VAT period ended 31 October 2023. The business is owned by Terence. All the goods are sold are subject to 15% VAT. Please take note of this 15% VAT. It will never be a different amount. Currently, VAT is 15%, so on all question papers, VAT will always be 15%. So required, calculate the VAT amount that is either receivable from or payable to SARS on 31 October 2023. This is what I was talking about. Now we're going to calculate how much money we need to pay to SARS or how much money SARS owes us. State whether the amount is payable or receivable from SARS. This is very important. Many learners forget to show at the end of, after they are done calculating, that this amount is payable or receivable from SARS. Information. Amount owed by SARS on 1 October 2023 is 38,200. This is our opening balance. So here is information B, which is the information that they give us, and we have to, before we do our VAT control account, we have to fill in the blank spaces that we see here. So all these blank spaces have to be filled in. And the column that we're going to use to prepare our VAT control account is this one here, the VAT amount. So the most important thing we need to know when filling in this column is that the excluding VAT is going to be 100%. The VAT amount is going to be 15%, and the excluding VAT is going to be 100%. What I like to use when doing calculating these amounts is known as the UK method, as you can see here. UK method means unknown over known. That means when I'm calculating here, you take what you know and put it under, and then what you want, you put it on top. You're going to see later on in the video what I mean. You might want to take this down because this is very important. Almost every time in accounting, when you need to calculate something, you're going to use the UK method, unknown over known. So like I said, the amount excluding VAT is going to be 100%, and this is always 100%. It never changes. The VAT amount is 15%, as we are told here in the scenario, that the VAT amount is 15%, we are told here in the scenario, and the excluding VAT will be 115%. This is very important. Please take note of these percentages as they will help you calculate what you need to calculate. Okay, so now let's get started with our calculations and calculating the missing amount here, VAT amount, excluding VAT, and all of these ones. Okay, let me just pull out my calculator real quickly. Okay, so now we can start calculating. So the first amount we're gonna take is our 420,000. Now we're gonna use this 420,000 to calculate our VAT amount. Okay, so we're gonna say 400,000 times by. Now we're gonna use our UK method. What we want the 15%. What we have is 100%. So you're gonna say 15 over 100. That's the UK method. What you want is the 15%. What you have is the 100%. So we say 15 over 100. We get 63,000, which is the amount that's gonna come here. Then now that we have our VAT amount, let's calculate our excluding VAT. So to calculate excluding VAT, we also again say what we want is 115, what we have is 100. So we can just erase that and put 115 over 100. We get 483,000, which is the amount that's going to come here. Okay, now we want to calculate our cash purchases of trading stock. So we're going to start by calculating this amount. So what we have is the 17,025, which is our 15%. So we're going to use our UK method, unknown over known. 17,025 times by 15, which is what we have. Oh, my bad here. It's supposed to be, oh, no, never mind. We want 100. So we're going to say times 100 over 15. Yes, which is what we want. We get 100. We get 3,500, which is going to go here. Now that we have this amount, we can calculate our including VAT amount. So again, we use the UK method. What we want is 115. What we have is 15, which is going to go here. I'm sure by now you understand the calculations. So now we are calculating goods taken by owner for personal use. 11,500 times by what we want, 15%. What we have, 115%. So it should be 15 over 115, which gives us 1,500, which is our amount for VAT amount. Now we need to calculate our excluding VAT, which is going to say what we want is 100%, what we have is 15. So 100, no, we have 115, so 100 over 1, which is 10,000. Now we need to calculate goods returned by customers. So what do we have? We have excluding VAT, which is our 100%. What do we want? We want the VAT amount. We want the VAT amount here. So we're going to say 3,000 times what you want, 15 over. So we're going to say what we want, which is 15 over 100. And we're going to get our VAT amount, which is 450, which comes here. Now we need to calculate our including VAT amount. So what we want, 115, what we have, 100. So again, this amount. Now we're calculating our bad debts written off. So for our bad debts written off, we're going to take the 23,000. Our 23,000 is 115%. What do we want? We want the 15%. So we're going to say 23,000 times by 15 over what we have, which is 115%. Oh, my bad here. It's not supposed to be 100, it's supposed to be 15%, 115% down here. Let me just fix it. So let me erase that. It's supposed to be 115%. Oh, I'm erasing the wrong thing now. So it's supposed to be 23,000 times 115%. And then let me put back the 15%. Yes, so 23,000 times 15 over 115, which gives us 3,000, which is the amount that goes here. Now we need to calculate our excluding VAT amount. What we want, 100%. What we have, 115. So 100 over 115% is 20,000, which comes here. Okay, now I hope you guys understood how to calculate the amounts. So basically, it's really easy. You say what you want over what you have, the UK method, known over unknown. So 420,000 times what do I want, 15, over what do I have, 100, and then you're going to get your amounts. So now, once we're done calculating these amounts, we can now continue and do our VAT control account. But our VAT control account, we're only going to use the VAT amount. We're not going to use the rest of these amounts. You're only going to use these amounts. You cannot use excluding VAT or including VAT. That won't give you the amount that you need to calculate whether receivable or payable to SARS. We're using this VAT amount here. These are the only amounts you're going to use. Okay, so here is our VAT control account. This is what you'd get in your answer book. And notice here it's worth 12 marks. It's usually around 12 marks. I've never seen a case where it's like more than 12 marks, but this is what usually it is, 12 marks. Okay, so here's our question here. Now we are calculating the amount owed by SARS. Oh, my bad. Now we are calculating the amount payable or receivable from SARS. So this is what they give us. Amount owed by SARS on 1 October 2023, 38,200. So before we do this, we need to take back our VAT, the table that we did on the previous slide. Now, firstly, we need to know that this side of our VAT control account is called the input side. Then this side is called the output. Input and output. What this means is that when doing your VAT control account, you must follow the stock. You must know whether the stock is coming in or the stock is going out. If the stock is coming in, it's called input. If the stock is going out, it's called output. Basically, if we buy stock, the stock is coming in, so we call it input. If we sell stock, the stock is going out, we call it output. So here's our table. Like I said, the amounts that we'll be using, these amounts here, we'll be using these VAT amounts. We won't use any amounts except these VAT amounts. Those are the ones that are going to go in our VAT control account. Now we need to sort out these amounts between input and output in order to calculate the amount payable or receivable from SARS. So they already gave you the transactions here. Like the first one, they tell you credit sales and what. A method I like to use when doing my VAT control account is a method I developed myself. It's called the SOCO and PIDO method. Let me pull it up right now. So this is how I do my VAT control account. PIDO and SOCO. So what this will help you memorize what goes on which sides. Please take it down. Please copy. Feel free to pause the video and copy it down. So PIDO and SOCO. PIDO is obviously the debit side. SOCO is the credit side. PIDO, the P stands for purchases. Any purchases come to our input. Input. That one is just the title. D, debit, because on the debit side. And O, owed by SARS. That means if our balance brought down is on the input SARS, this is the amount owed by SARS. That means it's receivable from SARS because SARS owes us. We are owed by SARS. Then SOCO, S is for sales. So anything we sell comes to our output account. Like I said, you follow the stock. When we sell, the stock goes out. When we buy, the stock goes in. That's why it's input and output. O, output, that's the title. C is on the credit side. And O, owed to SARS. That means that if our balance brought down is on the output side, if the amount owed to SARS, that means it's the amount we need to pay to SARS. So that's the amount payable to SARS. I hope you understand. feel free to just go back in the video and just rewatch me explaining this, because this is very important. This really helps you understand what amount goes on which side. Okay, now the first thing we need to do, since they told us here under information, amount owed by SARS on 1 October 2023, 38,200. Owed by SARS, if you look at your SOCO here, the O is on the input side. That means this is our balance brought down for the first. So we write balance brought down and we put the amount 38,200. Okay, so now that we have our balance, we do the first transaction. So the first transaction we are given here, remember, don't forget that we're using our VAT amounts. We're only recording the VAT amounts. So the first transaction we have here is credit sales. So if you come take a look here, SOCO sales, that means it's on our output. Also follow the stock, follow the goods. Where are the goods? If we sell on credit, the goods are going out. So it's going to be output. We're going to say credit sales. And we're going to say 63,000. The details don't really matter here, but the most things that matter is the amounts. You have to get your amounts correct and on the correct side. Then the next transaction we have here is cash purchases of trading stock. We have cash purchases of trading stock. So follow the stock, like I said. Where are the goods? If you're buying stock, where is it? The stock is coming in, so it's input. And also if you look at your PIDO here, input, stock purchases come in. It's on the debit side. So we're going to put it under. So we're going to write purchases and put it under input. Remember, we're still using our VAT amounts. We're not going to use any amounts in this video except our VAT amounts. Okay, the next transaction we have is goods taken by the owner for personal use. So again, follow the goods. Where are the goods? The owner has taken the goods out. Are these goods coming in or going out? The goods are going out. So we put it on the credit side as drawings 1,500. The next transaction we are given is goods returned by customer 450. Again, follow the stock. Where is the stock? Is the stock coming in or out? Are the goods coming in or out? These goods were returned by a customer. That means these goods are coming in. So we put them under input. Returns 450. Then our last one, bad debts written off. Bad debts is kind of a tricky one, but the thing you need to understand with bad debts is understand the root transaction. What first happened before we got to bad debts? So firstly, the customers bought the stock. That means the stock went out. We sold it, so the goods went out. Now, this customer has disappeared and we can't find them, so we need to write it off. Now, when we're writing it off, firstly, it was here under sales. We need to bring it back to this side under input. So firstly, we're going to write it under output. But then now this person has run away, so we can't find them anymore. So we bring it back to input. So it doesn't go under output, it goes under input. Okay, so now we're done. So once you're done with writing all your VAT amounts, your transactions, and please remember, keep in mind, we use our VAT amount. We cannot use excluding VAT or including VAT. We have to use our VAT amount. So now that you're done filling in your transactions, you have to write your totals. Add all of these up and add all of this up. The bigger side is the credit side. So once you add all of them up, you close off your account. 64,500, 64,500, which is the credit side because it's the bigger side. Now you do your balance carried down and your balance brought down. So your balance carried down will be 5,825 and your balance brought down is 5,825. And like I said when we started, if our balance brought down is on the credit side, this is the amount owed to SARS. If our balance brought down was on the debit side, it was going to be amount owed by SARS. So since it's amount owed to SARS, this will be an amount payable to SARS. It's the same thing, owed to SARS, payable to SARS. So if we were to answer this question, we're going to say, since they said state whether the amount is either payable or receivable, we're going to say it is payable because our balance brought down is on the debit side. Please don't forget to conclude in your answer book, write payable to SARS. There's an amount for that. Okay, or we are given a second option to write the transactions here instead of using this table method. I suggest use the table method because it's the easiest. So if you don't want to use the table and you just want to write it here, it will look something like this. Please, the balance brought down has to be negative or you'd get it wrong. The balance brought down is not positive. So basically think of this as your positive side and your negative side. So all of these transactions you minus, all of these ones this side, and all of these ones you add. Then you would get 525. But do not forget to conclude because there is a mark for concluding. So once you're done calculating, you say payable to SARS, and then you get your full 12 marks. I hope you guys enjoyed the video as much as I enjoyed making it for you. Please subscribe for more accounting and maths tips. Guys, please social support, guys. And share it to your other friends if they need help in accounting. Thank you very much.